Good day, everybody, and happy to be here sharing LM views today with you on crypto and many other aspects. Let me first introduce myself. I'm Estelle Braque. I'm from France and a global citizen of the world, an ex-banker, consultant, chief economist. So sharing views on less technical, more analytic issues on our subject today. Meirav, would you like to present yourself?
Yeah. Hi, everybody. My name is Meirav Harel. I'm a veteran in the fields of finance and technology for, it's embarrassing to say, over 20 years. And I've been combining the two before they were named Fintech. I think I started combining them somewhere around 15 years ago. I was a programmer, then an investment consultant, combined the two. And during the last 4 years, I've been advising and working with central banks, regulators, and enterprises in Israel and around the world in moving ahead with financial technology, including implementing digital currencies in interesting use cases. I lecture a lot. And for 7 years, I was the business development manager and product manager of one of the biggest security trading websites in Israel, Leumi Trade of Bank Leumi. I'm also a veteran of 15 years in Bank Leumi, and I left 4 years ago to start in my own way. I'm putting a disclaimer. I have COVID. I'm with a bit of a fever for the last week, so I might be forgetful.
Hi, good morning, everybody. Thanks for joining us today. I'm Nilix Devlukia. I am the founder of a consultancy called Payment Solve that looks at regulatory and policy aspects of banking and payments, and most recently, digital currencies. Prior to setting up my own company, I was the head of regulatory at the Open Banking Implementation Entity in the UK. And before that, I worked for the UK regulator, the Financial Conduct Authority, and the European regulator, the European Banking Authority, looking at all matters related to payments and PSD2. And I'm very much this morning looking forward to discussing with Meirav and Estelle all things CBDC, digital currencies, and crypto.
Great. And as I can see, we are 3 women entrepreneurs, so we are free and to share our views, independent, and having a long experience, and being able to share some views and really sincere. We have nothing to sell except sharing our views and knowledge, and trying to make these apparently complex, complicated issue more simple and being able to everyone to understand. Maybe not good occasion to recommend some investments for people, because I got asked many times, oh, you know about crypto, what should I buy? So, but more about the ecosystem and what's happening, and what is maybe the future, how we can design some ideas of the future. So today we are going to explore first definitions of what we are talking about, and the different concepts of electronic money and so on. And then how these very, very evolving issues are have been raised by independent new stakeholders, and how the traditional stakeholders are also going back or going into the market. So this is a very good occasion to analysis how new and old stakeholders are evolving and managing this issue, and how the market is evolving. That, and in a way that I will discuss that, but I would say that is more quite conventional, new innovation, and how the market incorporates innovation. And we are going to talk, of course, about a regulation, and consumer protection, and what's the impact on people and the end user for
and where things are going. I think that what we're seeing here is that innovation in an underlying technology that had been introduced. It was something like 11 years ago. We're calling it, Bitcoin. Satoshi Nakamoto came out. What was that? Like 11, 12 years ago. Came out a new technology, blockchain, or an underlying technology, and a new concept, which is digital currencies. Currencies that are not made, not created by regulators. And we're looking fast forwarding 12 years forward, and this invention kind of started a snowball effect that we don't know where it's going to be ending and where it's going to be leading. And it will not only affect each and every individual around us, but it affects governments and power holders. And it's very interesting to see how an invention can actually create new I'd say dynamics in who's strong and who's pulling in which direction. And we're at the point where the ideas that were declared in Bretton Woods 1944, I think it was, right, are actually standing in a question mark today. And they're thinking about creating a new Bretton Woods experience, this time rethinking where we should be going. Should the dollar continue being in the basis? Should it be a regular country-created currency? There are voices saying maybe it should be some sort of digital currency that should be the reserve of the world. So it's interesting to see how far one invention, or two inventions actually, can push all of humanity. So I think that's exciting.
Absolutely. And I think just to add to that, if you think about the genesis of Bitcoin, it was meant to be outside of the system. It was meant to be a little bit anarchic. And now we're in a space where actually the thinking is all about how do we bring it into the system?
Yeah.
How do we actually support this innovation? But I think it's just worth touching upon the fact that there are different types of this innovation.
Yeah.
So I touched upon the fact that we've mentioned Bitcoin, and of course, no recommendations and other cryptocurrencies are available for anybody.
No, we're
interested.
not. I'm an ex-investment consultant. We're not giving any advice to anybody. We're teaching and we're explaining what's around.
So obviously, we've got Bitcoin, which is what I think all of us would call a pure cryptocurrency. We've then got something like the concept of a DM, which was previously called Libra, which is a stable coin. And then we've got central bank digital currency, and the fundamental distinction
like
between
the digital yuan.
Yeah, absolutely. And we can come to that shortly. But the fundamental distinction between the two is that a stable coin is a privately issued digital currency, and a central bank digital currency, a CBDC, is issued by the local central bank. It carries that bank guarantee. And in most jurisdictions, it would have the same status as legal tender. It is my thinking as to the fundamental distinctions between the two. One is central bank backed, the other is privately backed, and has different mechanisms as to how it maintains its value. And obviously the most obvious example, and please, tell us some more, obviously, Meirav, is the digital yuan.
Well, okay, so I think that China is a very interesting case on many levels, and it's very interesting to see how they are creating a situation where they're taking a new kind of currency, a digital currency, and kind of like convincing people to get used to using it, right? And they're doing many steps. Now, it's also very interesting to see that, even though Bitcoin came out so many years ago, I think that it was about the same time that Facebook came out with the idea of Libra, and everybody was kind of like standing on their back heels and saying, no, Facebook, you're not going to be creating a digital currency. It's too dangerous. You could become the biggest central bank. And I think it was around the same time that two other interesting things happened. And one of them was that China decided and declared that it's going to be creating a digital yuan. And the steps that China has been doing to implement this idea are very interesting. And I think that many countries can kind of like look at that as a use case of how to move to, I'd say, cashless societies and implement digital currency and have people use it. Okay, And do remember that right now we're kind of in an arms race between countries in creating CBDCs, central bank digital currencies. China is just one of them. We have many other countries, including Japan, some in South America. And I think that the most interesting thing that lately we saw was that China has decided to use not only the official government banks in rolling out the usage of the digital currency, but rather using the two fintech, I'm going to call them fintech banks, and right, and
my bank and we bank. It's my bank and we bank, was it? So
my bank and I forgot the name of the other one.
Yes,
we bank. My bank and we bank.
Yeah, and they're using, this is so stupid, and they're using both of them as a way to roll out the usage of digital currencies. Now, this is very interesting, okay? Does that mean that any country that will want to implement digital currencies will need the cooperation of the banks around them, even the banks that are actually fintech banks, right? That are kind of like they have their own little thing in order to have this system work properly, okay?
But you raise, just to comment, you raised an interesting point about China has now said that it's going to allow Tencent and Alipay basically to participate in this ecosystem. And yet, you know, if you look at everything that's come out of the media, that the genesis of China having a CBDC was to actually curtail the power of these fintech giants. And so, but I think the thing that they're understanding now is that they have to build acceptance and you have to build trust. And, you know, I think building trust.
You don't want me to say what I think, right?
Sorry?
You don't want me to say what I think, right?
Oh, no, you can say, yeah, we can say what you want.
Oh, I'm just gonna ask, okay? How do you think China got the cooperation of Ant and my bank?
Oh, well. Cooperation
I'm just suggesting people, yeah, how did they get them to cooperate? I would suggest people to read about it. I'm not going to say anything.
You know.
But the fact is, it's very interesting where these initiatives are developed, and according to the last version of the BI study on central banks around the world studying CBDCs, 7 countries among per 8 are in emerging countries where electronic money is already not much developed, as we have in Europe. We have already electronic money, so but issued by or managed by the banks and issued by central bank. But in these emerging countries, they are less electronic based, and there is an interest. And for example, in Africa, electronic money is issued by MNOs. And the money is on the banking accounts, but just technically on banking accounts. So that's very interesting, and how these alternative electronic alternatives and digital are really might have a big market in these countries.
By the way, I'm sure you, or maybe our audience doesn't know this, but one of the places where China is leading in I'd say getting more users for the digital yuan, or a version of the digital yuan, is actually in Africa, amazingly enough, because what happened was that people in Africa, the usage of Chinese phones, Huawei and Xiaomi phones, is very wide. So for them to implement the idea of using digital currency, like digital currency, and the digital yuan, and having people transfer it from one Chinese phone to another Chinese phone is very, very simple. And you're seeing, and what we can see is that if we're looking at the different kinds of digital currencies now being I'd say used around Africa, one of the bigger usages is with the digital yuan and the version that it has set out to use in Africa. So that's also very interesting. Yes, there's a very interesting, I'd say, opportunity there.
Well,
there is a lack of international currency parallel to the dollar, and as Africa is doing a lot of business with China, directly being able to do the transactions in Chinese currency is very interesting. That points the question of interoperability about these digital currencies, and do you think the question is there, or might be, is there a question of interoperability between these digital currencies, or is there one currency, as we just began to say, but is there one currency that might be overwhelming the others?
Well, you've got a few different scenarios, haven't you? Because I don't see that any jurisdiction is going to give up its national currency. So we're going to have, if we have it, a digital yuan, a digital euro, which is being consulted on, and maybe a digital dollar. And so we're not going to have a single global currency in that respect. I think that is issued by a central bank. But obviously, if you look at what DM could achieve, that could, very easily be a digital global currency. But that's exactly, I think, what scared all the central banks when the first white paper was launched, because that very much said, hey, we can print money, So that's why we have seen the evolution of this regulatory framework that's evolved around, if you look at MiCA, you look at the UK consultation on crypto assets, that's very much thinking about, well, if you have a privately issued currency, private money that is going to replace bank money, and these are all of the policy concerns that regulators and policy makers are scratching their heads over, then what does that mean for society? So, these are really big ticket questions.
Very big questions.
Yeah, and then you've got the sort of, well, if the dollar is no longer the reserve currency, and I have a question mark over that, then what could it be? I mean, China has recently partnered with SWIFT. The media outlets are saying, well, it's all about how we transfer our domestic currency, but you can all see a natural evolution there. The consultation on the digital euro asked about an international dimension to digital currencies. If you look at the FSB roadmap on cross-border payments, one of the building blocks in there is an international dimension for digital currency. So this is already part and parcel of the DNA of how all this could evolve. And I think that the moral questions are going to become quite important in the direction of travel. And I think this is not something that everybody talks about, obviously, but it's almost like the Facebook battle that we see happening in Australia. Who controls the money, or who will control the money?
So this is very, very interesting, because I don't know who's been around digital currencies in the 2017 and 2018 ICO rush. Okay, I don't remember the term that they used because I have a fever. I think it was like coin wars or something. They had a really cute name for it, because the coins were like fighting against each other. Who was going to be the dominant coin? Would it be Ethereum? Would it be Bitcoin? Would it be Ripple? Okay. And what we're seeing, if we're fast forwarding again, like 3-4 years after, what we're seeing that the war has, like the war or the contest between the participants is again on the table, but this time the players are different, because the players right now are governments that are creating digital currencies, okay? And amongst themselves, who is going to be the dominant coin, okay? Is there going to be the one coin that, the game of coins, now I remember, the game of coins, it was named after.
It'll be one coin to rule them all, won't it?
A coin that's going to rule them all. Okay, and then so you have governments wishing that it would be them, right? And which makes sense. I mean, if I was China, I would want the digital yuan to be the winner in the game of coins, right? If I was the dollar, I would want to be the like a lot of big countries. There's much to be said to become the leading coin, right? But there are new players in this game, okay? And the new players are actually enterprises. Because in this competition right now, it's not only going to be countries that are going to be competing amongst themselves who is going to be the strongest coin. It's also going to be digital currencies that are this time created by enterprises, okay? And if we're looking around us, a lot of the enterprises that we know are playing with the idea of digital currencies. All of us know about Facebook and its token, which is renamed every time, and they're trying to find the way how to do it without having all the regulators go berserk, because truthfully, Facebook is the biggest country, right? I'm sorry, I'm not censorizing.
No,
It's unfiltered.
it's important to say it. It's important to have it unfiltered.
No, it's not. I'm going to regret this later. But okay, so Facebook is trying to be in this game, and Microsoft. There was a patent that Microsoft I think the patent was written and given in May 2020, if I remember correctly, about digital currency, a cryptocurrency. That they're writing a patent about, which I had to read the patent, I'd say a few times, in order to kind of like check that I am understanding correctly what's written there, because it sounds so far-fetched and so, I'd say, futuristic and innovative, and I didn't even think the technology exists. But there's a patent, everybody can look it up. And the idea there is creating a cryptocurrency that is based on reading signals from the human body of actions that are being done inside the body. Let's say a person, let's say if a person is reading and stuff like that, and if the person does a certain set of actions in his body, then a cryptocurrency is created. Okay. Yeah, you're making a face. Okay.
This is like biomining or something.
Biomining.
Yeah, I think it's the most innovative.
But very interesting that the question of how traditional stakeholders are getting into these markets and can also influence the market, as lately since maybe this beginning of the year, the big card schemes, Visa, MasterCard, and PayPal are into the market. Yes, Meirav.
Yeah. Okay. Sorry. Here. This is. I just want to show it. Can you guys see it, or is it showing in Meirav? Okay.
Well, I think that's
so.
There were
a few articles about this about a year ago. I think this is one of the most innovative ideas of creating a digital currency. It has so many use cases. It makes so much sense. And it sounds like, it could be that they just patented it as an idea that they want to create, and they're not yet there. But imagine that a company does manage to create a cryptocurrency that is the most useful and the most innovative and makes sense in the most way. Why would the reserves not be of a token that is of money that is created by an enterprise? Wait, I know what you're going to say, Nelix, and I'm just going to say one more thing about this. That Mark Carney, the governor of the Central Bank of England, said, I think it was somewhere around November 2019, that he said that that we shouldn't say no to the idea that maybe the token that should come after the dollar in the reserves should not be created by a government, but rather by an enterprise, because governments always have interests. And maybe it will be better if it's going to be created not by a government, but rather by some sort of corporation. Okay, so let's not put that off the table. It's an alternative. I don't know what the chances are, but it's one of the alternatives that's standing on the table.
Well, the chances are that we already have DM on the table. How that evolves or how somebody else comes into the market. But everything you say about a private enterprise creating a digital currency goes back to the point that Estelle was making about interoperability. Are these enterprises going to create closed loop systems, which, unless you do have one currency to rule them all, is not the best user experience? If I've got to go to different apps and use commercial bank money in one way and cryptocurrency in another way, I'm not sure that that's the best user experience. So, and there's all the consumer protection concerns or conversations that need to come out of what does it mean to have and use cryptocurrency, and I think one of the basic things that really needs to be addressed is what is the difference from a consumer perspective in using a digital currency or using e-money? you know, from a regulatory perspective, they're very, very different today and come with different protections. But do most people, if they have something in their wallet that allows them to pay, you know, understand that distinction between e-money, commercial bank money, and a digital currency, if it is a privately issued digital currency? I'm putting, you know, CBDC in the same basket as fiat, which carries central bank guarantee. And we can see this evolving, can't we? We can see that there's regulation proposed. But, you know, there are a number of things that we've touched upon. And I know, Estelle, you mentioned interoperability and consumer protection as well. So what are your thoughts?
I think that in terms of the monetary policy, we are in a moment. We might be at a moment where we can split the three classical definition of a currency. And there is one aspect treated by digital currency that would be transactions, and that would be different from the currency or the account where you put your money aside. So that can be backed by a central bank. So your savings, I'm not sure people would put their savings in Bitcoin and or a digital currency that are not backed by central banks, as the value might still move a lot, or they do investment in crypto assets. That's investment, that's speculation. But that might be another way to look at this issue. And we see the development of the transactional aspect of the currencies, and that's so consumer protection is issued or is managed by national national public institution. So aside or parallel to the development of this international global digital currency, would that be a global financial institution able to protect consumers? That's also very, very important question. I'm not sure that could be that could exist. So we are going also. We don't have so far any example to my knowledge of a company or a digital company of a failure and people losing their money, because we have examples as people losing their Bitcoin because they forgot their key.
From the crypto side.
On the computer, or just
no, we have it from the side of the cryptocurrency,
and there is no issue there. There is no solution. You forget your key, you lose your money. So that's acceptable for people who do investment or have money to lose, or just play game with investment in Bitcoin. But for everyday and the global or the everyone. So that's a question how national regulation and global digital currency can manage the issue. Not sure.
So
but I think
up to you.
Sorry. Yeah. You raised two questions. I hope I still remember them. One of them was the question of interchangeability. How do I use all these different kinds of tokens if they're digital, right? And I think and the second question is, how do we protect the users, and who backs up the system, and what happens if somebody forgets their code and all the rest of it, right? So I think that the answer comes in the merger of the new financial or financial technology innovation and the traditional financial world. And we're seeing that happen with Bitcoin itself. Because if we're looking, let's say, at PayPal allows you to have dollar, euro, Bitcoin, okay? So interchangeability is possible. You're also getting the security of PayPal, as you know, you're not going to be forgetting your PayPal account. If you do, you have the protection and all the rest of it. Not only that, if you're looking in Europe and also in the United States, you're seeing a lot of banks and investment banks that are creating different kind of solutions that enable you to hold digital currencies, and are giving you the I'd say the same kind of of protection that we're used to be getting for traditional currencies that have been around. So I think that when these two worlds meet, and the more they become one, then both of these problems could be solved. Okay, what do you guys think? Does that make sense?
Yeah, and these companies do choose one among. There might be, according to investing.com, there are 4,700 digital currency around the world, so are listed on the platform. So that the traditional stakeholders choose one, the biggest one, that's Bitcoin, and integrate it into in their traditional conventional world. There is only one elected by.
PayPal say he wants to add Ethereum as well at some point?
Am
I remembering wrong? Didn't PayPal say that he wants to add Ethereum as well, that he's going to be considering it? Or
yeah, maybe, yeah, one or two, of course, but there are 4,700.
The game of coins. Again.
But this goes back to, you raised the point about that these traditional players are allowing digital currencies to be used within their ecosystems. I mean, PayPal is a closed-loop ecosystem in many ways, and they're trying to build trust. We go back to the fact that we use money, we rely upon money because we trust it. You know, it has that intrinsic trust, and this is what's happening now in this space, is that the companies that want to foster the use of it are trying to find ways and means of building trust. And is that going to be them saying, well, you know, we stand behind it, this is how we stand behind it, these are the protections we're providing you if you want to use it, and that may well give them a competitive advantage. And then, you know, parallel to that, we have jurisdictions saying, actually, we want to foster innovation, we want to see competition in the market, and we will help build trust in this ecosystem by putting a regulatory framework around it.
Yeah,
and you've got those. Yeah, you've got those parallel tracks at the moment. You know, except for sort of regulation that sort of bans particularly cryptocurrencies and things like Bitcoin. You know, there's not really regulation as yet that fully supports it in the same way as is proposed, let's say in Europe with the MiCA regulation. And there's been, I think, publications by the OCC in the US about how banks could actually interact with digital assets as well. And we've used loads of different terms here, probably just in one sentence. I've used cryptocurrency, digital currency, digital assets, crypto assets, you know.
We didn't even talk about NFTs. So, you know, but I'm not gonna go. I think that's what's exciting. But you're completely right, and I think that the part of the regulator in the creation of the future that we're seeing is a crucial part. And I think that the regulator's part is not easy at all, because I'd say the pace of innovation being created is so fast that they literally can't necessarily keep up with what's happening. The tools that they have and the rules that have been created 100 years ago regarding money and assets and investment assets are not necessarily applicable to these new kinds of I'd say creations that are that we're seeing around us, and the regulator is kind of like, I see it, and and I help them with this, is kind of like asking himself, okay, which way should I go? Because if I ban everything, what am I doing? Am I sending users into more dangerous and unregulated exchanges and digital currencies? I can't ban anything. Okay, so I'm letting things in, but according to what standards should I be choosing? Which currencies or digital currencies or tokens or cryptocurrencies are what are the parameters and the criteria that allows me to differentiate and say, this is a safe one, this is an unsafe one, this is good, this is bad, this could be dangerous, right? The tools do not yet exist right now in the world.
Well, I suppose the safe, unsafe, you can have a very clear line, and that regulated, I would say, you assume equates to safe. Unregulated, from a, but maybe not. This is what I'm saying, is that private companies can build trust and acceptance by actually, putting their name, their brand behind whichever cryptocurrency, digital currency they want to support. There was something, and I'll read it because I can't remember the figures, but it's in Cointelegraph today, and it's actually saying that the figures were astounding. It says that when PayPal put crypto on its network back end of last year, it equated to about $277 billion worth of transactions, in a very short space of time. Those are quite big ticket numbers, and so this is obviously an evolving and, as you say, fast moving ecosystem. And when it comes to having a regulatory framework or putting in place consumer protections, it's going to be hard for legislation and regulation to keep up. So yeah, I think it's really important that as this ecosystem evolves, as regulation evolves, that they try and build in something that allows for flexibility, allows regulators to react to the market, and not make it inflexible in the way that, a lot of legislation is today. I mean, within the payment space, we've seen that although we've had a payment services directive in Europe for a very long time, regulations that were very forward looking maybe a few years ago are now already out of date.
Yeah.
And yet when things are hard set in law, right, how does the market move forward?
It takes longer to pass a law than to create a new innovation and have everybody.
Absolutely.
That's crazy.
Absolutely.
I think it took faster for TikTok to reach everybody than it was to pass laws. It's funny.
Yeah.
And that leads also to the question of volatility of the currencies. When one stakeholder like Elon Musk decides to buy Bitcoin, and the value of Bitcoin is clearly influenced by demand, supply and demand in that huge dimension. That's a problem for consumer protection and for usage.
Mostly for usage. I mean, the fluctuation of Bitcoin is actually a deterrent from it becoming a payment alternative, because you could be theoretically buying with Bitcoin something and you're paying for a pizza, and tomorrow that same amount of money could be worth buying a house, and then you're like, okay, so I think that kind of puts a question mark over Bitcoin being able to become the leading currency to be used as a payment method in the world, because it fluctuates so much and it's so dangerous, and you need something that's more stable in order for it to be used for a use case of buying things. Maybe DM is going to have the benefit in that. They want to create a stable coin.
Yeah, the Bitcoin has the capacity to pay for transactions, and does not have the capacity of being a value reserve for the moment, because the volatility is too important. And,
exactly.
Yeah,
it's a deterrent. It's a problematic issue that Bitcoin has.
It might be more the case for the Chinese
digital yuan.
Because it's backed by the central bank. It's backed on the currency controlled by the central bank.
Yeah. I agree with you completely. We had more questions, right? What were our other questions?
So now we have a question about the last developments about Libra, and Libra has been renamed DM. So it has moved. So we can go back to the birth or emergence of this, which was very libertarian initiative, willing to, like Bitcoin, to make a big revolution, and then it has moved to a stable coin backed on maybe the US dollar, and changed its name from Libra to DM. So that that says a lot about the evolution of the project.
Yes, bit of a branding exercise going on there. Whether it will, I mean, you know, automatically, I think we all still call it Libra rather than DM. We may get there. I think if you look at the differences in the white papers for Libra, the first white paper just felt like a we could rule the world type of white paper. You know, it didn't quite say that, but when you looked at what it was proposing, how it was going to get there, you know, and you can see very well why central banks all went a bit like, you know, we have to do something about this. The second white paper came out. It's looking to address the concerns that regulators have. But interestingly, you know, we're in this climate where the majority of global regulators are saying we don't want something like DM to launch unless there is a regulatory framework that sits around it. And it's easier to put in place a regulatory framework for something that looks and acts like electronic money. And you know, electronic money in the EU sense is regulated. It's going to be more challenging, and that has to be backed one-to-one with fiat in effect. It's going to be slightly more challenging for the regulations to manage, well, if it's a stable coin, so mitigating the risks of the fluctuations of something like Bitcoin, if it's a stable coin and it's backed by a reserve of assets, you know, how does that work? What does that look like?
Yeah.
What are the parameters that have to be put in place? I mean, and there's obviously that concern if you look at the legislation that's proposed, that this could launch and become big very, very quickly. And what does that actually mean for the financial system? If you have a Libra reserve, that Libra reserve
what do you think?
Could be billions.
What do you think, Alex? That's a really good question. What are your thoughts about this?
Which bit of all about this? There was quite a lot there, wasn't there? The Libra Reserve thing, I think, is the most challenging.
You raised great questions. What are your thoughts?
Yeah, I think the Libra Reserve is the one where it's going to be really challenging to determine, well, different aspects. If you look at the consumer protection perspective, how, as I am a consumer, going to have confidence that my pound Libra is a pound Libra or a pound DM or whatever it's called. But also, how do I get my money back? You know, who do I go to? What is the guarantee that sits behind? If it's DME money, fiat backed one-to-one, it's easy, isn't it? When it's something that could fluctuate, those technical requirements or algorithms that manage that reserve, you know, I think are going to be something that's carefully scrutinized. And then you're into the world of algorithms, which is, I think, going to be challenging. But I think some of the bigger impacts are going to be, how do you prevent flow of money if it's really popular? What's it going to have as the impact on the traditional banking system if money flows from my bank account to my Libra account? You know, and where will that money be held?
That's the main fear that appears in the documents issued by central banks, especially the European central banks, when they study CBDCs, how they really are discussing what could be the impact and of transition of traditional banks accounts to these CBDC accounts, and then they are thinking about putting a limit to or several thousand of euros to these accounts. But in Libra or DM, that who would put this limit? That's very interesting. So what we can say is the world, the different people, or globalization itself is appealing for a global currency, and the dollar seems not to be the one who can do the job anymore.
And there is that, I think it's also that the domino effect. I mean, we've all seen and lived through the time of banks being too big to fail. Well, we know that they're not always too big to fail. But if you have a an organization that is global, even more global than some of the banks are today, or, you know, the market cap of Ant and other entities, that has reaches into the financial sectors of so many jurisdictions. You know, I can't tell you what that domino effect would be, but it does make me pause and think that this could have so many ripple repercussions across the globe.
So many. Oh, so many, and on so many industries. And you ladies mentioned the banking industry, because I think that one of the most affected industry is the banking industry. Okay, there's a whole question mark surrounding the necessity and the new role of banks in the economic structures that are being built with all of these technologies. I mean, look at the idea that actually came in the United States. I think this was last May, if I remember correctly. With everything that happened with the pandemic, the United States wanted to send money to its citizens, right, to help with everything being under lockdown, like $1,000, $2,000, whatever that was. And one of the problems that they noticed was there's a very big amount of people that are unbanked. Okay, so one of the ideas that actually reached a point that they were thinking about it was, you know what? What's the problem? Let's just create a virtual account inside the Fed, okay? And we'll put the money there, the digital money there. And when people that are unbanked want to use this money, they're not going to be paying commission, and they can take out the money from there and use it. Okay, what does that mean? They kind of like created an alternative to banking with no commission. Okay, and I don't know what happened with that, because what would you say, the ripple effects of this kind of thing means a no banking system. Okay, and I think that kind of leads to one of the major problems that the regulator has right now, is that I'd say the fiscal and the monetary models that humanity is using is based on paradigms that are kind of interlocked with one another, which is A, the amount of money that is in a market, B, the job of banks as regulating the amount of money in a country, okay, and therefore regulating the economy and the inflation rates and all the rest of it, and trying to change any little thing in this structure kind of creates a domino effect on so many different levels, because the traditional financial systems are built on assumptions that are now being questioned one after the other. And theoretically, you know, every decision that the regulator makes can take things in domino effects in so many different directions, and could be, I don't want to be dramatic and say catastrophic, but if banks go, you know, if you take the position of the banks away, what does that mean on a macroeconomic level? They're a very important. They have a very important role in regulating macroeconomics, right? You can't just make them irrelevant. Okay, that would be very, very dangerous. Okay, we don't even have models to deal with that. And that kind of raises another question, by the way. If we're talking about Libra and Libra having their own, GM having their own currency of Facebook, okay? How does that work? I mean, if Facebook creates her own currency, okay, how does that affect the amount of money circulating in each country? Okay, so big countries might not feel this, but let's look about little countries. We have a lot of little countries, and you know, and they have their own system, and they're using the fiscal systems that we all know, right? And regulating the amount of money, and using, you know, more money or less money in order to not let inflation's rate go up and down. You know, we know the models. We all learned macroeconomics, and suddenly you have a body that comes and creates a certain amount of money, and then what happens to the amount of money in that country? Okay, how does a regulator control this? What are the models?
It's a good point, because all these currencies are private currencies, local. We can compare them to local currencies that already exist, especially in France. We have many occasions. You are in the US and so on, for circular local, very locally based economies. And the question here is that they are issued at the global level. So they are global, and they have an impact on local economies. So that's the really challenging issue. And I fully share what you said, Meirav, and just would like to add that the difficulty for the regulators and supervisors now is that there are options, other options, and global options, so they cannot avoid the discussion. They have to treat that, because there are competitors, and one of the main or first impact on Libra ID was to push central banks to think and to discuss and to study CBDCs. Before on Libra, they were not concerned that much about CBDCs.
I think I have a slightly different take on that. I think central banks have been looking at digital. I think central banks have been looking at digital currencies for quite a long time. I mean, all of the work that's happened in Sweden predates, Libra. What it did was sort of, galvanize it, in that we really need to think about this more. I think we've also moved from the very theoretical to the more practical because of Libra. I mean, if you read all of the papers that come out of central banks, they're all got lots of equations in them and economics. Right. Whereas if you read the latest consultation by the ECB on a digital euro, and it's a really good publication, it is the practical of what do we need to be worried about, and what do we need to mitigate if we want to launch a digital euro, and what does that mean? What does that mean for consumers? What does that mean for banks? Because everything that we've all touched upon are those big ticket policy issues. If a bank issues a CBDC, it could disintermediate the banking sector, and no central bank is actually going to want to do that, but that is a risk unless it's managed properly. If a privately issued digital currency is launched that gains traction, that also potentially disintermediates the banking sector. And then you get to the sort of discussion about, well, if it walks like a duck, quacks like a duck, regulate it like a duck. So then should these private entities, these firms, primarily the big tech firms, should they be subject to the full remit of financial services regulation? Because that's where some of the protection flows from, rightly or wrongly. And whatever the areas are, there is still trust for consumers, in most jurisdictions, that my pound is worth a pound. And that's because it's got a regulated banking sector, and it's got backed by central bank guarantee. But in some jurisdictions, as Estelle said, you face the risk of currency substitution. So I think that we've already got CBDC now. We've got the pilot in China. We've actually got a live, isn't it? The sand dollar in the Bahamas is actually a fully live digital currency. But I think that most jurisdictions, most regulators are progressing, but with caution.
Of course, it's important that they do that. I also think that there is should be a call for research of macroeconomists sitting and building and rebuilding the macroeconomic models that we all know. When were they created? 100 years ago, 150 years ago? When were they created? Estelle, there seems to be a need for people to sit down and rethink about the different scenarios and create the new thoughts of how do we deal with everything. And that's not something necessarily that the regulators should be doing. That's something that the academia should be doing, researchers should be doing. Of course, the regulator should be, paying for this, helping this happen fast. But the idea is that we're missing the academic knowledge and the academic, forward-looking models that come and say, if we do this, these are the repercussions. If we do this, these are the repercussions. If we do these are the repercussions. Therefore, maybe it would make sense to try this or this or this. They need to have somebody do the research and put this down in an organized way so that the regulator, it's too much to expect a regulator to do this. And truthfully, the models that we're using right now were not created by the regulators. They were created by academia people.
That's a global issue, Meirav. And I think, I'm sorry, but I think we can resume on that call for thinking, more options, more research, as we are close to 1 hour. I told you we could talk for hours.
To us, it happened. Did you notice that it happened to us last time as well? We were just starting to get like heated debate about where is this going, and and we haven't even touched upon the great idea of there are use cases of using digital currencies for frequent flyer points around the world. Do you know that? Which is such an exciting use case, right? And what does that mean? I mean, there's a lot of
we're not flying anywhere, so there is no frequent flyer points.
I'm not talking about flyer points necessarily.
I know.
You can do that for Hilton Honors. You can do that for any consumer group, right? But the idea is that you could use digital currencies as points for using systems, right? And there are very interesting implications and use cases right now. We can't even touch about that. When we mentioned NFTs or not, so I think that we have a lot of reasons to continue talking.
Absolutely.
Share. So next one is about
Ladies,
use case.
It's been an absolute pleasure. To those who have made the effort to join us this morning, thank you very much. And I believe that this is available as a video, so you can come back to it at any point in time.
And then I can see it when I don't have a fever and see if I said and if I spoke coherently or not.
Very coherently, absolutely no problem.
We learned a lot. We learned your deep thought.
Yeah. Wonderful.
Thank you very much.
All right, ladies, it's a pleasure.
Thank you. Take care. Bye.
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 Bye.